Newsflash, short sellers win while mutual funds lose. It's no surprise in 2022, if you were in the stock market, you lost, didn't you? 2022 was a brutal year to be in the stock market. However, there were some people that actually won, and I want to talk about what they actually did and really how that's actually hurting you more if you're in mutual funds, especially if you're in 401ks and IRAs. Okay, so this is an article here that I saw in Yahoo Finance. It was actually at the beginning of this year, so it's a few months old, but it's still very, very important to understand what's going on here. So the title of this is Short Sellers Made $300 billion in 2022's Market Wipeout. Now, it's interesting because they talk about here, as I'm scrolling down, they mention how in the S&P, tumbled 19.4% in 2022. Recently, we just saw an article with Fidelity that said Fidelity mutual funds, specifically those that are 401ks, lost 20.5%. So congratulations, if you have a Fidelity 401k, you lost 1% more than the S&P 500. S&P 500 lost 19.4, Dow only fell 9%, while the NASDAQ, which is very tech heavy, fell 33%. You lost a third. Now understand, when the market goes down, this is bad for you. Because if you lose 20% in the stock market, you need a 25% return to get back to zero. So let me give you an example. Say you have $10,000, you lose 20%. You lost $2,000. You're now down to $8,000. Well, people would say, well, don't I need 20% to get back to even again? No, because you only have $8,000. To make $2,000 from $8,000, that's a quarter, which is 25%. So you actually need 25% to get back there again. With the NASDAQ, where they fell 33%, you actually need a 50% return to get back to where you were before. This is bad, right? This is why I'm warning people right now, the stock market may not be the great place to go. But here's the point. They said there's over $300 billion made by short sellers. Well, who are short sellers? What does this even mean, and how does that affect you? So short sellers, what they're doing is they're betting against the market, right? They're betting that stocks or the S&P 500 or wherever they're investing is going to go down. Now, this is very counterintuitive, I know, because when I was a stock coach, even for people that hired us to teach them how to trade stocks and options, people would say, wait a minute, how can I make money when the stock loses? Or how can I sell something I don't own? Well, here's how a short sell works, right? A short sell works where you do the sell transaction first. You sell the stock first. And then later on, you buy it later. Now, people might think that's kind of abstract, there's no way you can do it, but the truth is this, even when you buy a stock, you don't really ever make money until you sell the stock. This is hard for people to grasp sometimes because they think, oh, my stock's up X percent, I've made X percent or X number of dollars. No, you haven't. You have not made a single dime until you've sold that stock. So until then, it's just numbers on a piece of paper. When you sell, then it becomes real. So there has to be two transactions. There has to be a buy transaction. There has to be a sell transaction. Once that's done, the money's determined. This is the same thing. It's just done in reverse. You set the sales price at the beginning, and then at the end you buy it. Ideally, if you set the sell price, you want to still buy low, sell high, right? So if you're betting that's going to go down, you're going to hope that the stock is at a high where you put the sell price there. And then as the stock goes down, you hope to buy it at that price. So say, for example, a stock is at $30 a share. So you want to sell it at $30. And then it goes down 33% down to $20 a share. And then you buy. Once that transaction is done, you just made $10 a share off of that, right? That's how you made your money. That's the key thing with short sellers. Most people don't realize you can do that, but yes, you can actually make money while the stocks go down. Can you do this in your mutual funds? Absolutely not. You're not going to do this with mutual funds. You're not going to do this with just having your 401ks or IRAs. If the market goes down, you're helpless, okay? The best thing you could do is get out of the market. That's the only thing you can really do. By the way, disclaimer, I'm not giving you investment advice to sell right now, okay? So anyways, so that's what short sellers do, right? They're selling first, buying later. Well, if they expect things to go down, this is a big deal. So tech stocks especially got sold short. Now this could be bad for you because remember, stock prices are based on whether people are buying or selling. Well, guess what happens when people are betting against the stock? When people start selling short? Well, when they start doing the sales up front, it looks like people are selling the stock, aren't they? Well, that brings the price down further. So what happens is you become the helpless little victim here, right? And I hate to even call you that because you shouldn't be a victim at all. You should take control of your money and your finances. But you do feel helpless, don't you? Because if they just keep short selling, you keep losing money. This is actually what happened in reverse. Remember we did a React video. If you haven't seen it already, I did a React video about the whole GameStop Netflix type of show that was there. Now with GameStop, we actually talked about how they were selling short on it. A lot of the institutions were selling short, and all of a sudden, the average Joe came in and said, you know what? I'm gonna buy this thing. Let's buy. And they drove AMC stock through the roof, right? In fact, even with, or sorry, not AMC. Well, it did happen to AMC too. It happened to GameStop, specifically with this example, right? And so it started skyrocketing. But eventually, of course, people, they blocked out the buying of the trades, allowed you to sell, and the price came crashing back down again. This is why if you're in the market and all you can do is make money when it goes up, you might be the person that actually loses the most money. But short sellers, because thanks to really the worst market that we've had since the Great Recession, the worst market year since the Great Recession, guess what? They made $300 billion while people lost 20% plus out of their portfolios. Now, is this fair? Personally, this may not be a popular opinion, but I think it is. It's really about those that know what they're doing and those that don't. People always say like, man, Chris, like the education, if we have to hire somebody for education, that's expensive, right? Well, you know what's more expensive? Ignorance. Ignorance is more expensive. When you don't know what's going on, when you don't realize that you could be benefiting while other people aren't. That's a key thing. That's financial literacy. Financial literacy allows you to be in the know. It allows you to know what you're doing. And that's what's so key here. And so, and they talk about key stocks, right? Like I have clients right now, for example, there's a stock right here. We talk about some of the popular ones like Meta, which is like Facebook, right? The parent company for Facebook. Meta had tanked last year big time. Alphabet, Google. I actually have a client that has both Google and Meta. They have both of those, and they lost money. And we were even telling them, beware that these things have had a nice run from 2020, 2021. Be aware this could easily come crashing. Did they listen? They listened a little bit. They took some money out. They scaled out, as they call it, right? They pulled some of it out, but still left a bunch of the stock in. They lost a big chunk. What's the natural thing you're gonna do if you feel like you've lost money? You're gonna stay with it, right? Even if the submarine is going down, is diving down below, you still feel like you have to stay with that stock and just be in it till the end. And the problem is when the stock markets go down, they go down quickly, but when they rebound, they go up more slowly. So you could easily be waiting another 7 to 10 years before you finally get back to saying, oh, now I made my money back. But guess what? You just lost, didn't you? Because you lost to inflation. Inflation just kicked your butt in that meantime. And you said, well, did I get back to where I was? No, I didn't, because I just got back to the dollar amount, but now that dollar amount doesn't buy as much as it used to 7 or 10 years ago. By the way, this even happened after Y2K in the year 2000. Remember, the market was hitting a big high in the year 2000, March 2000, it was doing awesome, and it came tanking down, and then it started to come back, and then 2007, boom, it started tanking downward again. Did you know that it was about 2013, 2014 before the market came back to where it was? But for most people, because they were in mutual funds, what happens is when they start paying fees all throughout, because even if the market loses, you realize you still pay fees to those mutual fund money managers, right? So as you're paying those fees, even your 401ks, guess what? It took most people till about 2015. And I know because I had clients that would say that. They'd say, finally at 2015, I finally got back to where I was in the year 2000. 15 years. And I guarantee inflation had doubled during that period of time. So did they make it back? No, they didn't. They just make it back to 50%. That's the danger you have when you're in the traditional stock market. This is why I preach against just doing the typical mutual fund buying and selling. So I'm bringing this up not as trying to rail against short sellers. I'm actually using this to wake you up that there are some other dangers, that when people sell short, they're making money. However, that can actually cost you the most money possible. So I don't want that to happen, right? I don't want that to be the case. So here's the thing I want for you is I want you to become financially free. I want you to take control of your financial future, right? I want you to be able to do that. So I want you to be able to come out as a winner, not as a loser of this thing. I don't want you to become like every other American where they hope and pray that they're gonna make it to retirement in 30, 40 plus years and then never make it because of things just like this, because of things that you don't know. It's what you don't know is what can hurt you the most. Now, I love to hear what you guys have to say about this. Please subscribe, but also comment. What are some of your thoughts here? Do you like the fact that people can sell short? Have you done it yourself? Have you made money? I would love to hear comments below of your experiences with this. And by the way, if you haven't done so already, check out this other video where Dave Ramsey looks at Graham Stephan's portfolio. Really interesting to see how he does. Here's my reaction. Check it out.